Morning, Steve Free in Chicago with the morning grain comments. Overnight grain prices are sharply lower. A couple of things. Number one is that the U.S. kind of stepped up the trade war issues with China. The President of the United States announced that he would impose another 10% tariff on $200 billion worth of additional China's goods if they do not back down from the issues that is important to the U.S. as far as narrowing the trade gap between U.S. and China. This is on top of already tariffs that have been announced that would be imposed both by U.S. and China on July the 6th. So it's kind of like a small embargo going on with U.S.'s largest buyer of soybeans. So there is no value that we can say the market will stop at this until we know more about what the final results are going to be. Again, there's ongoing talks before July 6th, and hopefully cooler heads will prevail, but right now you have to assume the worst. On top of it, we had some rains across the Midwest. Overnight showers activity stretched from South Dakota, eastern Nebraska, across most of central Iowa, southern Wisconsin, and northern Illinois. And the Midwest has this stationary front that encompasses mostly that area, and we would expect that this week we'll see off and on showers each day for those areas. In fact, a few people in southern Minnesota and northern Iowa are complaining about too much water. Temperatures did break here in Chicago. That's a good thing, and we don't really see any extreme hot temperatures in the forecast over the next 2 weeks, although there is talk that we'll see maybe normal to above temperatures during this time frame. If I'm a corn or soybean plant and I'm not waterlogged, this is the perfect forecast for crop conditions. We also noted yesterday that the USDA said that winter wheat is rated 39% good to excellent, and harvest is 27% done versus 19 average. Corn conditions 78% good to excellent. Last year we were at 67. Soybeans are 73% good to excellent. Last year we were 67. The grain inspections, wheat exports are running about 50% behind a year ago, and we're currently forecasting a 6% increase. Corn's running 9% behind, which is unchanged from what the USDA is suggesting, and beans are running 7% behind versus a 5% decline. So the question mark is, what happens to all these trade wars rhetoric? And it is not a time to necessarily pick a bottom. And what happens as far as July and August weather is concerned? Funds are now estimated to be short 20,000 beans, short almost 30,000 corn, and flipped into a small short in the wheat position. They continue to be long 70 meal and short about 70 oil. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.